Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Monday, the 18th of April, 2022 day trade bull versus bear webinar with Steve Miley on the call. Welcome, everyone. Welcome to a new week. It's Easter Monday here in the UK. So it's a holiday and also throughout Europe. So it's the first thing to say, guys, really, particularly for you guys in the US, or if you're in the UK, Europe, and you're trading US markets today. So US is open, not a holiday in the US. US fully open. By the way, I hope you all enjoyed your Easter weekend. Lots of Easter eggs and Easter hunts and all that kind of stuff. But we're back to the start of a new week. And just watch out, I think. Sometimes on this day, you can see liquidity issues just because you've got a big chunk. Asia's already going to bed. Europe's not been in all day, or the early morning or the overnight. So you've had no European guidance on where markets should be. Obviously, we were closed on Friday as well. A lot of people take the long weekend, even if they're in the US, they may be running it into Monday as well. And so you've got no European players, in the market. I mean, people will be in, and there'll be skeleton stars at banks and hedge funds, etc., and they'll be obviously watching the US markets. But you can have liquidity issues, and less liquidity can often sometimes mean increased greater intraday volatility. So just watching out for that today. I'm going to kick off. We're going to look through the calendars. We'll take a look. A few things from overnight. There's not much from overnight. There's not much from over the weekend. So I'm going to keep that limited, and we'll just take a look at a few charts as well. I'm going to keep this limited because it's a holiday. I'm in the UK. Obviously, it's a holiday here, but we're still doing the webinar. So I'm going to keep it fairly brief today. So let's just take a look at. So this is I put this up on the site. So this is in the members area. If you go to where the research reports are, we get the daily technical analysis reports. You'll be able to pick up, as well as those daily technical analysis reports. Over the weekend, I publish our weekly recap and outlook, and this is that you can download and take a look at. So just looking back to last week, the big event last week was really the CPI data and the ongoing hawkishness from the Fed. Charles Evans last week was more hawkishness, although the ECB, the European Central Bank, were actually slightly less hawkish, slightly more de facto, more dovish. And earnings season kicked off with the financials, and they were somewhat disappointing. JP Morgan leading the financial sector lower. And again, as we continue to say, the impact of the Russian invasion of Ukraine and the war in Ukraine having less and less impact on markets. There's lots of horrible stuff going on, but the focus really now is on how the impact from that war, the inflationary pressures, the supply chain issues, the commodity issues, how that's going to potentially impact an already fragile market that was already concerned about inflation, global financial markets. So it's more that focus in here. And so just looking ahead to today and this week. So as I said in here, Easter Monday in Europe and the UK. On the central bank side, we get RBA meeting minutes on Tuesday, PBOC on Wednesday. So probably not really going to impact much on the markets we're looking at here. Maybe slightly on the PBOC on their interest rate decision. Looking for a more dovish tone there. But at the back end of the week, we get Thursday, we get both Powell speaking and the Bank of England Governor Bailey, and Bailey speaks again on Friday. Standout data of the week, I'll come to that as we go through in a second, though, but the global flash PMIs. Now, they've S&P now own the market, so they're slowly rebranding those as S&P Global. So the S&P Global flash PMIs come out on Friday, and then we'll see it's earnings season as well. Now, I've already picked out a few of these, but I'm going to run through the calendar shortly. But these are the standouts: Bank of America, Johnson & Johnson, Netflix, Tesla, Procter & Gamble, and Verizon. Just looking at the calendar, I've picked out some of the high spots in here. So, as I say, Europe is closed. We had China and GDP and retail sales data out already. A quick nod to that. So, China GDP data actually beat expectations in here today, but March weakness sharply raises outlook risk. So, remember, this is very backward looking. This was before we had a war going on, right? Part of it is before we had a war going on. So, if we go and take a look at the actual calendar in here, what we see is on the China GDP data in here, you've got a lot of green, okay? So, you've got Chinese GDP, industrial production, and retail sales. Actually, retail sales missed, but they're highlighting in here in this article on Reuters that the March data showed weakness, which is a bit of a concern because that's the data that's obviously going to be in the impacted by the war, okay, the Ukraine war. So and the higher inflationary pressures that are coming through in here. And again, look, retail sales worse than expected. So yeah, so we've got that going on. Had that going on this morning. Flipping back to the calendar again in here, or the highlights I've got here. Then we've got the RBA meeting minutes, probably not too much for us to concentrate on. Canadian CPI, only really if you're probably trading the Canadian dollar on the forex side. New Zealand CPI, again, if you're trading the New Zealand dollar on the forex side. And then, as I mentioned, Powell speaking, Bailey speaking on Thursday, Bailey again on Friday, UK retail sales on Friday, and then probably the main standout data of the week is going to be the global flash PMIs. And if we go take a look at Canada, that's pretty much all summed up in here. So if we've got the data for the week in here, you'll see it all through there. I mean, there is IMF meetings. I don't think they're going to, I think from Wednesday, I don't think they're going to have a particularly big impact on markets, but actually from Tuesday, I can see there, maybe it's right from Monday, no, from Tuesday, I think. IMF meetings probably not going to have a big impact, but watching out for those IMF meetings as well. But that's all the data there that I've mentioned in here. And you've got various other Fed speakers coming up throughout the week. Okay, switching to the earnings calendar now. I've already gone and applied the filter on this. So remember in here on the filter, we only because we're looking at the indices really and the impact on the indices. We're not trading the individual stocks. We're only looking for the ones, the bigger stuff in here. So if we go in here, we're looking at in here, as I said, Bank of America, Charles Schwab, Bank of New York Mellon in here, all coming through today. Johnson & Johnson, Netflix, Lockheed Martin, and IBM probably standouts there for Tuesday. Tesla, Procter & Gamble. We've got some others actually here on Wednesday. ASML and Abbott Labs, probably watching those as well going into Wednesday. Thursday, probably nothing too much of significance in here for us to watch. And then Friday, Verizon, maybe American Express and Honeywell as well. We'll keep an eye on those. So yeah, we've got some important earnings to continue. Let's switch to 5 things to start your day, running through the macros, what's going on. Little hope of peace in Ukraine, Russia bombing missiles hitting locations across the country. But, again, nothing really... nothing, even though Vladimir Putin said talks with dead billionaire Roman Abramovich traveled to Kyiv in a bid to restart negotiations. So even though there's not much hope on that front, it's not really impacting markets at the moment. So crude rallied, the commodity space remains very sensitive to any fresh news. West Texas Intermediate rallied to a new rebound high at 108.55 a barrel. And then what else we got? Bank of America. We've already had some results in here already. So we go back to the earnings calendar. You'll see Bank of America beat. There's an article in here. So Bank of America beat profit estimates on strength in consumer lending. So they're offering more from the retail side. Bank of America doing well. And then if we go back to that earnings calendar, you'll see we've got, it's actually a kind of mixed in. Most of these are before the bell. So we've had most of these already. And yeah, so Charles Schwab actually that doesn't look like it's out yet. Bank of New York Mellon missed, but the main one, Bank of America, beating, and that's with JP Morgan obviously more negative last week. So that should give a bit of hope to the financials and maybe raise them a little higher today. So markets in Asia, so Australia and Hong Kong are also closed. Europe are closed today. Asian stocks were slightly lower. US stocks in here did start lower in here. So US futures and bonds drop as traders mull Fed moves. So we did get a push lower. Bank of America gains in pre-market. So we did get a push lower this morning. So a lower with Asian stocks lower. So overnight, even overnight from the European Open in here, there was no European Open. But when I got up this morning, US futures were lower. We were down up to, I think, about 0.75% on the NASDAQ, about a third, maybe up to 0.5% on the S&P. But they've rebounded since then. So they were lower and bonds were lower as well, going to lower prices, higher yields. But bonds have rebounded as well. So keeping an eye on those bonds again in here. If we look at so we were down, obviously, at the end of last week. The Dow was slightly lower than the S&P down. That was on Thursday, remember. But look, Dow's unchanged now. Only 0.25% down on the S&P, and the NASDAQ's less than 0.5% now, having been notably lower than that previously this morning. And I think that's all they've got on 5. Yeah, a quiet day on the data front. What else do we have in here? So yeah, again in here, stock market. So we've already looked at those. We spoke about Bank of America. And so look, no let up in bonds period amid the Easter break. So yeah, so bonds did go lower in price, higher in yield this morning initially. Okay, but if we go take a look, before I go to the charts, look, we're nailing on now. So completely, basically nailed on that we're going to get a 50 basis point move at the next meeting from the Fed. And if we go out to the June meeting now, you've got 65%, you've got 70% chance that you're going to get another 50 basis point. This is then the chance of only a 25 at the next meeting in here. So pretty much I'm nailed on in here. 65 plus 20. So no, sorry, 95% chance now. This is even going for a bigger move. So in here we're talking about 250s. This will be 250s, 50 at the next one. So these two in here, and then this is it for an even bigger move. Okay, so they're kind of nailing on the chance that we're going to get a back-to-back 50 basis points. Certainly we've got the 50 basis point move here, and then a really good chance that we're going to get only a 7% chance that we're only going to get a 25 now basis point hike at the June meeting. Let's go take a look at some of the charts. So here's the bond market first of all. So you see the bonds in here having a big sell-off on Thursday. This morning we've gone down close to last week's lows and rebounded. So hopes there that this could be a base forming. Right now this is all in pre-market with Europe and UK closed. All right, so how much you read into this, I don't know. But if you look at the chart in here, it does look like, potential. Look, we've rebounded off the lows. There are double bottoms all the way up here, like miles away. But it does look like, for this, that's the big sell-off that we saw on Thursday, last Thursday at the end of the week. In here, we're kind of putting in a little base. So bonds are putting in a little base in here. So maybe some upside rebound potential for bonds. You keep it. I think you have to, if you're trading the stock indices, if you're trading the bonds, you're certainly watching it. If you're trading the stock indices, you need to keep an eye on this in here. If we go take a look at the S&P, again, you've got this dip and a rebound. So if we go back to the bonds in here, similar kind of chart, right? So similar dip and a rebound, little hammer pattern forming, dip and a rebound on the equities as well, dip and a rebound. Now we did undercut last week's lows, but then rebounding. Look, we were previously last week we were holding at that 50%. We've undercut the 50% and we're getting back just above the 50% retracement of the whole rebound of March. So the market kind of reluctant to go lower in here this morning. Now I'm not saying that I'm bullish in here, but just be wary. I'm not sure which way I would play this. You have to say that it's still in a bear trend, right? Lower lows and lower highs. You sell into this at some point, but right here, right now, I think there's a risk we bounce into here and then maybe come lower from a higher point. So there's two trades there. I think initially higher. You can see that the latest. This is on a 1 hour chart. The latest 1 hour chart. The last hour in here, the last 43 minutes in here, very impulsive move higher. So the risk for me is that we push back up into here and then potentially lower from there. So there could be two trades in it today. And if we look at the Nasdaq, it's the same thing. We went down to and held just above the 61.8 on Tuesday, Wednesday, Thursday last week, down through that 61.8 of the March rebound, back rebounded above it this morning already in here. Again, a hammer pattern. And if we take a look at the 1 hour chart on the Nasdaq, again, look, potential base, again, impulsive move over the last hour, strong move over the last 2-3 hours. And for me, the risk is back up to here, towards like above 14,000. But then maybe there's a sell opportunity. Maybe there's two trades in there, one into here and then one back lower later, or maybe it just runs higher throughout the day. Okay, but I think for now I'd actually be buying it on a very short term 1 to 2 hour trade, but then maybe looking to reset on a short. Or if you want to wait, you wait for the rebound up into here, wait for it to fail, and as it rolls, you sell into the rollback lower. Okay. So that's where we got that side. Let's have a look at commodity markets in here. So just as we're on gold anyway, I'll start with gold. Let's start with the daily chart. So gold is breaking out from this range. We spoke about this last week. Bit of a hesitant day on Thursday, but down and then rebounds, so a strong rebound. And look, bullish this morning. Okay, really strong this morning. Now the problem with buying it here is you're buying it, having had an already strong move already on the overnight. So in here, do you want to buy into the fact that it's already done that today? It has just swung lower and going back bid. I think if you're going to do it, you pull the trigger now before it takes out the high. But yeah, I think there's a reason to buy it, but you might have already seen the move for gold for the day. Let's go take a look at oil. Again in here, oil, if we put on the daily, first of all, daily chart in here, indecisive. We did go initially higher above 108.5 and then dip back lower, kind of indecisive so far today. But on the back of three strong kind of Marabuzo-y type candlesticks, in here, not full Marabuzos, but three strong candlesticks. If we go to the 30-minute chart, it's swinging back higher. I think you have to go long, right? And it's breaking. If you think about, broke this trend line and then didn't accelerate back above the trend line. So the trend line's kind of redundant now. But if we think about the counter trend line, the little one off the top, take it across here. through here. If it breaks back above this little counter trend line, you can zoom in, put it on a 5-minute chart, draw that counter trend line better. It's breaking above that already, right? Takes out that trend line back above the recent high. So that recent high from about, what's this, 1 hour chart? What are we on? 30-minute chart. So that from about an hour ago, just over an hour ago, that high there is 107.18. Takes out 107.18. It could easily be back up to the highs and above. So, maybe that's your line in the sand trigger to go long on the top side, but it's also flirting with breaking this little down counter trend line in here. So maybe even pulling the trigger on the break of the trend line, or if not, waiting through that 107.18 level. So yeah, I'll leave you with that, guys. Remember what I said about the pockets of illiquidity, the fact the market might gap around a little bit, maybe a little more volatile. So just watching out for that today, given Europe, UK out. I'm going to wish you all a great trading day. Stay safe out there. I'll be back with you with another bull versus bear webinar on Tuesday.